Look at how this company is paying dividends year in, year out. Talk about consistency. Hello everyone, my name is Flo. Welcome back to Flo Finance. You already know what we do on this channel, so no need repeating it. If you haven't subscribed, click on the subscribe button below. If that subscribe button looks red to you, it means you have not subscribed to this channel. Some people do not know that I have two channels. When they're watching me, they think I am on the other channel which they've subscribed to. No. If you want to be getting notifications when I upload on this channel, which is dedicated to finance, investing in Nigeria, you need to subscribe here and enable notifications. Ring the bell and select all, so that you know when I upload new videos. In my last video, I talked about getting a stockbroker, which is a prerequisite to what we are going to talk about today. Have you gotten yourself a stockbroker? Have you? If you have, let me know in the comments, or if you already have a stockbroker, even before I made the video, let me know as well, Today, I'm going to talk about the things I look at in a company before I invest my money, my hard-earned money, in buying their shares. I'm going to put a disclaimer. Again, you know, these financial videos, one needs to be careful. I'm not an expert, and there are so many things you can look at before you invest in a company. There are so many indicators, but I am a simple girl by nature. I don't like stress. So I have a list of things I look at, the basic things that point towards, this is a good investment, this is not a good investment. I strongly believe that information overload can keep you from taking action. So I don't want to overload myself with all those technical analyses and all that. No, I keep it simple and keep it moving. That said, the very first thing I look at in a company before I invest is the sector the company is in. You can call it a subsector as well. For me, it's very important because there are some sectors I don't even want to touch, or subsectors I don't even want to touch at all. I like investing in the banking sector. I like investing in agriculture, if there are any to invest in, because there are not a lot. I like investing in food and beverages companies, so that's like food subsector. Let's take a look at the Nigerian Stock Exchange website. So these are the industry sectors. There are 12 sectors companies that can be listed on the Nigerian Stock Exchange. You have agriculture. Under the agricultural sector, you have crop production subsector, fishing, and then you can read the description. You have construction, real estate, building construction, consumer goods. You have automobiles, motor parts, food products. I like investing in food products. And then financial services, you have the banking sector. I like investing in banks. But Nigerian banks have been doing well since a lot of them consolidated and went public in the mid 2000s, like 2005, 2006, 2007. A lot of banks went public. Nigerian banking sector is gidiwa. But you see this insurance sector, subsector, no, I will not put my money there. Insurance companies, Nigerian insurance companies, no. When I say that the Nigerian financial sector is doing so well that it can match their counterparts in Western countries, I'm not talking about insurance. No, they don't know what they're doing. Until they get their act together, no, my money is not going there. And recently, I got some information that they do not pay their interest. Like when people invest in insurance companies, it will be story. In fact, basically scamming. Someone reported them to me recently, and I started digging, and I found that this is a popular trend. Like you invest in insurance companies, at the end of the term, story. I'm not going to be supporting people that are behaving like scammers because that is what it is. If someone invests in your company, at least give the person the capital. Now, how can you eat capital and eat interest? But then you have healthcare providers, medical, pharmaceuticals. Pharmaceutical companies are big in Nigeria. Industrial goods, building materials, information and communications technology. That's where you have the telecoms, and these days telecoms are powering it. telecoms companies. You know, the world is now a digital world, so everything is digitized. Data, internet data. These guys made a lot of money this year in spite of the pandemic, because everybody was at home living their life on the internet. Natural resources, chemicals, precious metals, precious stones. Yeah, this is like where you have steel companies, cement companies, oil and gas. The next thing I consider, this one may not be important to a lot of people, but it is very, very, very important to me, yeah, is the registrar of the company that I'm going to invest in. Yes, the registrar is the company. Usually when a company sells shares, they nominate a company, another separate company that will be managing the shares, keeping the shareholders register, be responsible for paying shareholders their dividends. Yeah, that person is, that company, not person, that company is called a registrar of the other company. For instance, Nigerian breweries have first registrars as their registrar. That registrar is very important to me because some registrars are nothing to write home about. For instance, GT Bank, their registrar is Datamax registrars. Datamax registrars, I don't know. They are at Anthony Village. Yeah, I've been to their office a few times. First of all, they have a website, but I don't understand that their website. It looks like it's hacked. When you click on some links, these pop-up ads, you know, when you visit dodgy websites and you click on links, pop-up ads will be, you know, popping up all over the place. That's what happens on that website. The contact information there do not work. Their email address, I've sent emails there, they bounced back. Their phone numbers, they use this 01 Lagos number that no longer works. There's no way to contact them. I do not understand how a big company like GT Bank will be using Datamax registrars as their registrar. I don't understand it, because GT Bank, on one hand, is a big reputable company, and on the other hand, they're using a very bad company as a registrar. I cannot contact them, nothing. I'm not going to sell my shares now because I like GT Bank, but any other new company I'm going to invest in, and I find out that Datamax registrars is their registrar, I'm not investing. I don't see how I can come with my hard-earned money to invest in a company. They will be making my life difficult. Nobody has got time for that. The third thing I consider when investing in a company is if they pay dividends. The company must be paying dividends, and consistently at that. Yeah. At most, I can forgive them if they miss 1 year out of 10 years, let's say, yeah. But the company needs to be paying dividends every single year without fail, yeah. Because the main reason, or the only reason I invest in shares is for dividends. I invest in shares passively. I just look at the company. If I like it, I buy the shares and relax and be earning my dividends year in, year out. I'm not interested in buying low and selling high, which is known as trading, like trading in shares. You actually make more money that way, but you have to be actively involved in doing that. I don't have that time. Yeah, I want my shares to be 100% passive. So the only incentive there is dividends. A company paying dividends consistently actually means that they have cash, they have money to pay. Because a lot of these companies that don't pay dividends, because they don't have money. They tell you that they're investing it, they don't have money. Let's look at the first company to see their dividend history, and that's Fidelity Bank PLC. I chose to go with this bank first because they have the most detailed investor relations page on their website. When you arrive on any website that is interested, that is serious about attracting investors, they should have an investor relations link in a prominent place on their website, so you don't have to look for it. So let's go there. And from there, on the left here, you will see a lot of links where you can click on to read more about. This is all about investment, very detailed. So in their dividend history, look at that. Look at. They've been paying dividends since they went public. I bought these shares in the private placement level, yes, before they even went public. So, and since they went public, I can testify, I am a happy investor, I can testify that they've been paying dividends consistently. Let's start from the beginning. 2006, they paid 11 kobo per share. 2007, 16 kobo, 30 kobo, and even in 2009, the year of the big market crash, they paid dividend twice, maybe interim and full So they paid a total of 7.5 kobo. And then 14 kobo, 21 kobo, till 2019 is the latest financial year. We are still in 2020. The dividends for this year will be paid next year. This is a good company when it comes to consistent dividend payments. And look at their share price as at today, 1 naira 77 kobo. Let's look at another company. Let's pick Zenith Bank. Some companies, they make it difficult for you to get this information. Investor relations, shares information. No, this is not what I want. I don't want the shares of every company. I want information about your own shares. Financial updates 2019. Yeah, I'll actually have to go into every single financial statement for every single year to find out how much they paid in dividends. A company should be able to do this for the shareholders. I don't like put it in a table for us. So easy. Okay, let's go. Annual report. Let's see how much they paid. Okay. Consistent and growing dividend payout in the last 7 years. The payout remained unchanged year on year. Okay, so this is a graph of the dividends they paid over the last 7 years. 2019, they paid 2 naira 80 kobo per share. So you can see that this company, Zenith, is also paying dividends consistently. Let's check another company, GT Bank. It may look like I'm only looking at banks. Investor news, shareholder information, financial information. So I'll have to go into their financial. Anyway, I'm a shareholder of GT Bank, so I know that they pay dividends consistently, but it's quite difficult to find this basic information on their website. I mean, if you're paying dividends every year, I believe that you should proudly display it on your website, shouldn't you? Anyway, you have to go into the financial reports of these companies one by one and search to find out how much they paid in dividend for each financial year. Unlike on Fidelity, you just see it on one page, which is very good. The next important thing I consider is the dividend yield. So not only will you be paying dividends, you need to be paying me good dividends. You are paying me dividends, quite all right, but I need to look closely at this dividend you're paying me to know if it's worth it. So in this case of these three companies, you may say, why is one company paying so low? 20 kobo, only 20 kobo. But dividend yield is related to the value of the shares, the price of the shares. Dividend yield can be looked at as interest. For instance, if you carry out a fixed deposit with your bank, they pay you interest at the end of the term. The same with treasury bills. So interest and dividend yield is pretty much the same thing. It depends on what you're talking about. I mean, they mean the same thing, but if you want to sound like you know what you're talking about in the financial world, you should use the right terms. Because we are considering year 2019, let's go and check the value of these companies' shares during that year. That will tell us the amount of money we had in that company, we gave to that company during that year. For that, I use this nifty website. Yeah, this is a very clean website. It gives me the data that I need. It shows the stock exchange of some African countries. So this is Botswana, Ghana, Lusaka, Malawi, Nairobi, Nigerian Stock Exchange. So yeah, this site is owned by, from the comments, his name is Michael Waisi. Thank you so much, Michael. I really appreciate your site. When you click on Nigerian Stock Exchange, it will take you to this page where you have the all share index. You can plot for 1 month, 3 months, 6 months, year to, yeah, it's a very good website. And then you have the top gainers and the bottom losers for the last trading day. Yeah. And then you have here all the companies listed on the Nigerian Stock Exchange. Okay, what I use this website for is to look at the historical price of shares. So let's go to Fidelity Bank PLC and then plot the share price for the year 2019. So this is the ups and downs of Fidelity share price from January 1 to December 31, 2019, the financial year in question. These are the prices for every single day. But I'm just going to take one price for the whole year. So the average, I would say, was 2 naira per share for 2019. The average, yeah. That's the share price. And they paid 20 kobo per share for last year as dividend. So to calculate the dividend yield, you're going to calculate how much you invested in the company for the year 2019 with average share price of 2 naira per share. For someone that has 10,000 Fidelity Bank PLC shares, the value of the shares last year is 10,000 multiplied by 2 naira per share, 20,000 naira. And then they paid 20 kobo per share dividend. Again, 10,000 shares multiplied by 20 kobo, which is 0.2 naira, will give you 2,000 naira. So this is the money this person made by investing 20,000 naira, which is the value of the shares last year. So if you want to know how much in interest you got, it's the money you made, which is the dividend, 2,000 naira, divided by the value of the shares, which is 0.1. But to convert that to percentage for 1 year per annum, you multiply by 100. Simple interest. So that's 10%. This is 10% dividend yield. You got 10% of the money you invested in the company as dividend, as returns on investment. You can actually remove the number of shares from the equation and still arrive at the same percentages. I'm just using these number of shares to make it realistic. I want to involve the shares in there. But you can actually divide the dividend by the price of the share, the average price of the share, and multiply by 100, and you still get the same percentage. I'm just using the share numbers, 10,000 shares, to make it realistic. I hope that makes sense. Let's go to Zenith Bank. Again, we take the average for last year. Let's use 21 naira. So they paid 2 naira 80 kobo per share in dividends for last year. Again, using 10,000 shares to get your dividend yield, that's 28,000 divided by 210,000, and convert that to percentage, to simple interest, that's 13.3% for last year. Let's go to the third company. At 31 naira per share, 2 naira 80 kobo per share, 0.09. So multiply that by 100, you get 9%. So you can see GT Bank gave their investors a return on investment of 9% for last year. Fidelity Bank gave a return of 10% for last year. Zenith Bank gave a return of 13.3, a whopping 13.3 for last year. So this is how to compare and contrast. So let me try another company in another sector. Yeah, okay, this one is Nestle. Nestle declared 63 naira 50 kobo, and let's find out their share price. This one share of big men, 1,000. Okay, so let's say the average share price of Nestle for 2019 was 1,390 naira per share. So 63.5 divided by 1,390, 0.045. That is 4.5%. You see, Nestle, which is a very expensive company to invest in, one share is 1,000 something, returned 4.5% on investment, which is much lower than these banks that I'm talking about. So this is how I check it. Dividend is very important to me rather than reputation. Some people, maybe Nestle is a reputable company for them to invest in. You know, they feel good saying, I'm an investor, I'm a shareholder of Nestle. But now shareholder we go chop, now company we go chop. My brothers and sisters, I saw that this video is already too long and I still have a lot to say, so I'll have to stop here and talk about the rest in part 2. If you're with me on this channel, please click the like button because it helps more people see this video, and share it with your friends and family to continue to spread the word. In part 2, I'll get into a bit more advanced indicators, PE ratio, price, earnings, growth ratio, and so on. I'll link it on the screen when I upload it, so click the box on the left to watch part 2. See you in 2 days.